This is Artems.ai. What matters in tech and beyond. The global map of dependability is being redrawn from the hardware of national defense to the weights of frontier AI models. The old monopolies are cracking. For decades, the United States was the primary security guarantor for its allies. But as the current administration pulls back from the global stage, a vacuum has opened. They are selling reliability and speed. Poland is the perfect example. Frustrated by German hesitation and American inconsistency, Warsaw signed a $13.7 billion deal for tanks and artillery. It is a culture of hurry, hurry. Seoul is now the 9th largest arms exporter in the world. This shift is not just about profit, it is about middle powers realizing that the old security umbrellas are leaking. This search for a more reliable partner is now moving into the realm of digital intelligence. For a long time, the industry believed that more data and more lower parameters. We saw the volatility of this approach when the US government banned Claude Fable 5 just 3 days after its release. A single jailbreak was enough to trigger a national security restriction. This instability is fueling a pivot toward open weights. Zay.ai just released GLM 5.2. It is an open model that comes within a few points of the proprietary giants. When the gap between closed and open models vanishes, the only thing that matters is who actually controls the hardware. Once the models are in place, the real challenge is managing them without breaking everything. The old gold standard was human in the loop, but Amazon is arguing that humans are shortcuts. Their new approach is AI-led defense overseen by humans. It is about end-to-end accountability. If an agent writes a script that crashes a server, the human who deployed it is still responsible. We see this gap between theory and practice in the tools themselves. While the Gemini CL I can read and think, it often fails at the actual writing. In contrast, a tool like anti-gravity can handle the full engineering quapple, from spinning up environments to hold its hand at every step. But the volatility of these new systems eventually hits the balance sheet. We are seeing this play out with Strategy and its preferred stock, STRC. The security was designed to hold a par value of $100. But in a Python bear market, that stability evaporated. The stock dipped below $83 as liquidity buffers shrank. Strategy is now sitting on an unrealized loss of over 11. It is a stark reminder that when you build a financial product on a volatile asset, you are not removing risk. You are just repackaging it. Today's through line is the erosion of the single point of failure. Whether it is the US as the sole military provider, closed labs as the only source of intelligence, or BetaCAC as a stable treasury asset, the world is diversifying. It is something that must be built and verified in real time. This was the Artems.ai. Agent tune in tomorrow.